Throughout the COVID pandemic, you've probably put less miles on your car than you're used to. Though this might lead you to the conclusion that car dealerships are struggling to find buyers, many dealerships are actually thriving due to pent-up demand. On this episode of Marketside Chats, we sit down with third-generation car dealer Frank Gesualdo of International Autos to get a better understanding of how his family has adapted their business over time. Today, International Autos owns 25 dealerships across 4 Midwestern states, which makes them the perfect case study to see how COVID-19 has affected small businesses around the country. In addition, we'll be chatting with Frank about the current state of the auto supply chain, his PPP loan experience, and how he plans to approach the new direct-to-consumer business models seen in today's car industry. You're listening to the newest Marketside Chat.
Welcome back, everyone. We have a great episode for you today. We're going to be talking with Frank Gesualdo of International Autos in Chicago. We've got him on the line right now. Frank, thanks for being here.
Thank you guys for having me.
Of course. So, Frank, why don't we start by you telling us a little bit more about International Autos?
It's a family business. It was originally started by my grandfather, probably 60 years ago at this point. He had a couple Oldsmobile and I think a Ford dealership in Chicago. My dad got into the business. After that, was able to grow it pretty successfully. At one point, he combined all of his stores into like a mall concept. This was in like the late 80s, early 90s. It was in Kenosha. He had like 11 or 12 franchises all under one roof. Sold that 10 or 12 years later, actually to CarMax, and then kind of restarted. He actually sold all but one franchise, moved that franchise up to Milwaukee, and started acquiring dealerships again. And then when I got into the car business, it's now about 15 years ago, full time, we kind of started to aggressively pursue growth again. And now we're here. We've got about 25 stores in 4 states.
Awesome.
So I started right after college. I've been working summers and free time, though, since I was probably 12, 14 years old. Kind of ran the gauntlet, worked in all the different various departments for a summer.
What was your favorite department?
Oh, that's a good question. I actually liked writing service. So when a customer comes into the dealership, that's the person that kind of writes up their service ticket, asks them what's wrong with the car, et cetera, et cetera. And then they communicate that through system to the technician. I only say that because it probably gave me the best customer experience because you see more customers on a consistent basis. When I was selling cars in the summer, I could, talk to 2 or 3 people a day. So I didn't get a lot of sales experience from it. But with service, you're writing up, 15, 25 tickets a day.
Yeah, absolutely. And what were some of the other departments that you worked in as well?
I worked in parts, docked parts, shelves, wrote parts tickets. I washed detailed cars. I worked in finance. I worked in sales, as I said. And then for like my last summer or two, I shadowed sales managers and was kind of like their assistant. And then that led to when I graduated college, I became a sales manager at one of our stores.
Yeah, so how would you say that your journey has crafted your management style that you have today, whether it be people you met, experiences you had?
I had the benefit from a very young age of being in all the managers' meetings, and I worked with a lot of different managers at a lot of different stores when I was younger. So I picked up a lot of different tricks or tips from many different people, including my dad. So my dad's best managers at the time, and it definitely helped me get a good start in the business.
That's interesting, Frank. So what kind of growth ventures do new car dealerships pursue in order to maintain sales projections?
Sure. So there's a couple different ways to acquire car dealerships. And I guess it should state a dealership really, we're in the new car franchise dealership world. And all that really is the right to sell that manufacturers make in a certain area. And there's a couple different ways to acquire it. You can get a new point where a manufacturer awards you those franchise rights. Those are tough to get, especially in developed cities, around Chicago or any bigger city or any populated area. Most of the dealerships are already owned. There's not a lot of new growth there, but they do pop open from time to time. In order to get one of those, you go through a process with the manufacturer where you submit a package. If a point becomes open, you submit a package. They review it. They'll narrow it down to like the top 3 candidates. You've got to give them, the real estate side of things, tell them where you're going to put it.
Yeah.
You've got to have a deal in place. You've got to tell them what you think that store can do, how you're going to get there, forecast it for them. And you've got to show them the plans for the facility, et cetera, all those financial things. You'll go meet with the manufacturer once they narrow it down to the top 3, and then they pick one to award it to. That's the best way to do it because you're not paying for the actual franchise rights.
Mm-hmm.
But it's also rare and more difficult because a lot of dealership groups want those. Anytime there are open points available, any dealer in the area that knows about it is going to apply for it. I was going to say the other way is obviously to purchase it from an existing dealership. Easier to do, but more expensive because you're paying that other dealer for those franchise rights on top of the facility, the real estate, inventory, everything else.
Yeah, absolutely. So which manufacturers are you working with the most?
We kind of started originally as a Highland Import Group. We have, Audi, BMW, Benz, Porsche. But over the years, we've kind of diversified originally into non-Highline imports. And now we're buying some domestic stores. We just got big enough to where we felt the need to diversify so we weren't too reliant on, one type of car or a couple manufacturers. The manufacturers we represent now, we've got 3 Audi stores, 2 Mercedes-Benz stores, 1 BMW store, Porsche store, Jaguar, Land Rover, Volvo. I think that's it for the Highlines. And then we've got 3 Subaru stores, Toyota, Honda, Kia. I'm trying to think of what I'm missing. Volkswagen. We recently bought a Buick GMC store. That's kind of our foray into the domestic side. I think that covers it.
Awesome. So we know most of your locations are in the Midwest. Do you ever see yourself expanding in the future, maybe like across the country?
Yeah, we would like to. We have tried to get a couple stores in Florida, in the Southeast.
Okay.
There's a couple other areas that I think we're trying to target, mostly in the South. Some of the higher growth areas where there is opportunity for new points. Mm-hmm. We like to cluster our stores. So we're not the type of group that's going to buy one dealership in Florida. For us to go into that market, we would need to group a couple different stores together.
Gotcha. Okay.
When the right opportunity comes along, we kind of work on like a hub and wheel process with our stores where we've got, at least one main hub where we can share staff and expenses from that, other stores in the area, one centralized office, accounting, things like that. It just helps us keep costs down and profitability high when we've got that type of system set up. It's also just much easier to run, easier to get people, so on and so forth.
That's great, Frank. And, one thing we're really curious about in the office is Tesla. We've been following Tesla for the past couple months right now. And, we're really curious as to how car dealership business models are going to compete with Tesla's direct-to-customer tactics.
So I could go off into a lot of different directions on the Tesla effect. To answer your specific question, both ourselves and a lot of other dealer groups and the manufacturers that we represent are investing pretty heavily onto more of an online sales delivery model. What's happened with the pandemic has kind of sped that up, obviously. Most dealers do now you can do most of your shopping online. You can buy, set up payments, buy your car online, and we will deliver that car to you. The same goes for service. The difficulty in that arises sometimes with paperwork in the states. Every state has a different set of paperwork, so it's hard for these manufacturers to get a uniformed process in place for it.
Right.
And some of the automotive systems that we use in our dealerships that, all dealers use are a little antiquated. And they don't necessarily communicate well with online systems, but that has been improving. It just took a while. So we're at the point now where we can offer that. It's not direct because we're a dealer, right? So it's not like getting the car directly from the manufacturer. You're still going through a dealer. But from a customer standpoint, they can purchase cars online. They can get it delivered to their homes. So it's pretty much there now and at this point. That's, one way.
Yeah, for sure. And then
Interesting, yeah.
I guess one of the other things I was kind of wondering about when you mentioned earlier that, you're kind of stationed in 4 different states, just out of curiosity, do you find any state to be more, hospitable for your type of business to thrive in, or, whether it be, regulatory stuff by like local and state government or like demand or stuff like that?
Yeah, I mean, they all have their challenges.
Yeah.
Illinois is very difficult to work with in a lot of different regards.
Yeah.
The one benefit you do have in Illinois, though, is from a sales tax perspective, 1% of the state sales tax goes to, half of 1% goes to the local municipal government. And when you're in the car business, those numbers tend to be inflated because it's you've got big sales numbers, right? If you're buying a $50,000 car, that 0.5% can be significant to a local government, especially when you multiply it over, the entire dealership. The average dealership could have, $50-60 million in sales a year. So those in Illinois, the local municipalities are more welcoming to dealerships in their area. So it's easier to find locations here because of that. Where in, the other states we're in, Wisconsin, Indiana, Minneapolis, they don't get any revenue share, those local municipalities, of the sales tax. So they tend not to want car dealers in their areas, which makes it hard to find cities that let you in. And because of that, it's harder to find property for us. So that's the one thing that Illinois has as an advantage, but they're very difficult to work with in pretty much everything else. They are very aggressive auditing wise, and their sales tax rules are kind of ambiguous. They can't really define them well. A lot of different dealers set things up, for example, on a lease differently, and it's hard to get a straight answer. So it kind of lends itself to you when you get audited, because they're not definitive about it, they can take it different ways and charge you back kind of either way. So it can be frustrating.
Yeah.
Minneapolis is probably the easiest to work with from that perspective.
Okay.
They seem to have their stuff together pretty well, but they all have their challenges and have their positives.
Frank, now that you're shifting more into everyday consumer vehicles, I imagine that you're competing with CarMax more than ever before, which I find ironic after hearing about your grandfather's mall concept up in Kenosha. But how has that competition been with CarMax?
Yeah, it's we kind of, CarMax doesn't. They might have one or two new car franchises.
Mm-hmm.
They're used only focused. We definitely do compete with them on the used car side, but from what we do, we tend to, like we can sell certified pre-owned cars where they can't. So we kind of lean heavily on that. It's a little bit different of a market than they can dive into. So we've got an advantage there. But yeah, we do compete with them. Carvana too is, definitely growing, getting into that used car market. But again, there are so many, like I said, we're a new car dealer, new car franchises. We obviously also sell used cars, but I don't think people realize how many small used car lots there still are out there in a lot of these cities. And those are the guys that are really getting affected the most by the CarMaxes of the world and the Carvanas of the world. They're taking a lot of that share up. It hasn't really affected our used car sales. In fact, in a lot of ways, because Carvana is driving some of these smaller used car lots out of business, it's benefited us because we're not competing with them anymore. Now, eventually they'll start to compete with us, and it'll be tougher. But for now, they're really crushing these small independent used car lots, and not really affecting the new car franchise dealers as much.
Yeah. I'd love to keep talking about the industry a little bit. How has demand been over the last few months during this pandemic?
Yeah, surprisingly, obviously when this first started, during like the true shutdown, months, days, March and April were brutal months for us pretty much all around. We were off, as much as 60% in some stores.
Mm-hmm.
But once May hit, we got a little further into this. It kind of flipped. There was a lot of pent-up demand, and business started to get better. And in the last 90 days, we've seen record months for June, July, and August from a profitability standpoint. So it's actually, in a weird way, helped with some things that have helped our profitability.
I'm curious to know what was like the key driver in those, like the record-breaking months. What was causing all that growth?
So I think it first is probably pent-up demand, but beyond that is
there was probably a shortage of cars too, right?
Correct.
Yeah.
Had to shut down, all those factories for 2 months. And the industry in general had a problem. It had too much inventory, which obviously hurts margins.
Yeah.
And on top of that, it increases our overall expense structure because we have got to pay floor plan interest on that new car line and inventory. So that kind of reset the entire industry in a good way, where all of a sudden inventory got short. demand peaked because of the pent-up demand, and it kind of was just a unique circumstance on a supply curve where our margins increased drastically. Our expense went down because we weren't carrying as much inventory. Service was way up because pent-up demand, and our profitability just spiked. Whether or not that continues is a different story, but we're still very short inventory-wise. We're probably in a point now where we're short to the detriment. It's a very fine line.
Yeah, I was going to ask, what is the whole process in getting like new inventory into your stores? Is it delayed because of the whole pandemic, or?
Correct. It's usually it's an allocation system. Different manufacturers handle it differently. Some manufacturers do weekly allocations.
Okay.
So they'll look at your cars at your store. They look at your incoming cars. You've got a sales rate, like a 75-day selling rate, and they match you up with a day supply. So, if certain manufacturers use a 90-day supply, certain ones use a 150-day supply.
Gotcha.
The high lines on the lower side, the non-luxury stuff's on the higher side there. And they kind of match you up either weekly or monthly. So they'll give you an allocation of cars weekly or monthly based on your day supply. So when COVID hit and the plant shut down, we didn't get any cars for a 60-day stretch.
Yeah.
We were lucky enough, while our sales were off drastically, we were still open. We were still selling cars. We were still servicing cars. So we weren't getting any cars, and we were selling through inventory. And then when things kind of opened back up, we really started to sell cars. So it got quickly.
I'm interested to hear how many employees you oversee and how your employees were affected during this pandemic.
We have about 1,000 employees.
And I assume you had to make some pretty tough decisions, when it came to keeping or letting people go during the pandemic.
Yes. Because we're deemed a necessary company, or whatever the term.
Yeah.
So we're able to stay open, but it was under very specific rules about how many people could be in the showroom, how many people could be in, our service area. So we couldn't keep everyone at the dealership for regulation reasons, for, safety reasons, and it just made no sense from a financial standpoint because we were doing 50% less business for a while. We probably cut 10% of our employees,
Mm-hmm.
and then temporarily furloughed another 30%.
Okay.
So we reduced our staff by about 40, some cases a little more, some cases a little less. But, we temporarily furloughed that 30%. And after about 6 weeks, 7 weeks, whenever the, shutdown stopped, we probably brought back half, right away, and then another half a couple weeks later, business needed it. I would say we're still probably at 95% of where we were prior. But that's just because we realized we could do the same or more with less people.
Yep.
A lot of businesses probably also realize that. But the employee part was probably the hardest situation. Nobody really knew what was going on. We try to do our best from a safety perspective for these people. We're responsible for them. They've got families. Obviously we're not going to try to force anyone to come in and work, but we were open. We wanted to remain open. Majority of our employees wanted to work. So we just needed to figure out the best way to do it, the safest way to do it.
Did you have to go through any PPP process in light of that, or?
We did.
Yeah.
How was that process? Is it simple, or did you find it to be tedious?
It at first was a mess.
Yeah.
They kept changing the rules I don't know if I'm going to say rules.
Yeah, I want to say no one was really like clear on what was going on or how it worked.
Correct. They kept changing the qualifications.
Yeah.
They kept changing the process. Everyone went through a bank to actually submit the application. We've got really good relationships with banks. Because we've got to rely on them pretty heavily, and we've got such support plans with them. So we had that advantage, but they didn't know what was going on either. We probably had, between me and my dad and our CFO, 25 conference calls over a 3-week period, and 90% of it, ended up not mattering because they just kept changing it so much. So you try to establish a process to get these applications in the right way, and then a day later the rules would change, and it was kind of mute. So the first 2-3 weeks of it were very frustrating. When they launched the applications, that day was a mess. Banks still didn't know what to do. We used 2 main banks for all of our stores. So one was doing it one way, the other was doing it the other way. But once we got like 2 to 3 days in, it actually was pretty smooth after that. We haven't, the second part of it, I don't know how that's going to go.
Yeah, I was curious. I know they're talking about a second round of PPP loans. Do you think you'll end up taking advantage of those, or?
We won't. I'm talking about more of the forgiveness.
The forgiveness aspect. I got you. Okay.
It was supposed to be like 90 days, I think, after, but they keep pushing that part back. I don't know how we're going to handle it, how we're going to fare there, what we're going to end up doing. To be honest, I kind of stopped putting a lot of effort into thinking about it because I don't know that they know how it's going to happen yet. So I don't want to, we're not going to work ourselves up into a tizzy thinking about something that's going to change again 50 times.
Yeah. And how does a year like 2020 even compare to a year like 2008?
There's some similarities. This happened much quicker.
Mm-hmm.
But from like an uncertainty standpoint, from like a feel standpoint on the financial side, it was kind of similar. I was just only a couple years out of college then, in 2008, but it's just the general uncertainty of what was going to happen on a day-to-day basis. What to do with our employees. The general feel was kind of similar. But obviously this unfolded differently. The government reacted much quicker. There's still uncertainty, but from a financial standpoint, it seems like the recovery was quicker, at least, in the short term as we're talking today. We're in 2008, 2009, it was slower.
Yeah. So kind of going back a little bit, I know you mentioned that you graduated in the recession. What school did you go to again?
Fordham University.
Okay.
In New York.
How'd you end up picking that school, out of curiosity?
So I went to Loyola Academy. It's a Jesuit high school. Fordham's a Jesuit university. My high school probably sends 10 to 20 kids a year to Fordham. Mm-hmm. So I knew some kids that had graduated ahead of me that were there. They liked it. I liked the idea of going to school in New York City.
Yeah.
I kind of knew that I was going to come back and work in the car business. So for me, I thought it would be, and that business is and was in the Midwest.
Yeah.
So I liked the idea of going out east and going out to New York City for that experience.
Yeah. And so how did, kind of going into that and choosing Fordham and, kind of having an idea that you were going to get back into the car business, did that have any, influence on what major you decided to pursue, or things you'd like preferred to study to help you kind of be in a more advantageous position once you were ready?
Yeah. I mean, I was in the business school. I majored in finance and marketing.
Mm-hmm.
Two things that do apply to the automotive business. Am I using those things on a daily basis today? Probably not.
Yeah.
The thing with the automotive business is it's very specific in a lot of ways. It's unique. There's not a lot of other businesses like it. Kind of combines, parts of a lot of different types of businesses. You've got the retail side of things, the customer service side of things. You've got marketing. You've got finance. You've got real estate. So you need general knowledge, and I think being in the business school and those two majors helped me with that. But like I said, my business it's very specific. So most of your learning is on the job.
Yeah. And then kind of, touching on the marketing aspect of things, I got to imagine that trend has probably shifted for you during the pandemic as well.
Yes. It's, a lot of stuff that happened during the pandemic, it really just sped up things that are already starting to happen or were happening over the years. Where our marketing model was 80% digital, it became 100% digital.
Mm-hmm.
And the way we spoke to our customers obviously changed. It had to be a specific message about what we could offer for them during this time. Like we touched on earlier, it was more about the fact that you can buy a car online.
Yeah.
We can set up a service appointment online, and we can deliver it to you, and we can do it safely. But as far as like the mix of things, we were already pretty heavy digital only. It just made it even heavier.
Definitely. So I guess kind of, going off that, one of the things that, we pay really close attention to in the market is Tesla and Nikola, because they're, like the one of those, highly volume traded stocks right now. I guess it would kind of be interesting to, hear your perspective on, the business model of Tesla and, what pitfalls you see with it or, benefits. Yeah.
So, like I said earlier, I can go in a lot of different directions with Tesla.
Yeah.
It's definitely a hot button in the dealer community.
Mm-hmm.
They've found a way to skirt, the franchise model, which, from a selfish perspective, not something I like, but beyond that, it's because of their stock success.
Yeah.
You're kind of seeing all these other manufacturers chase that a little bit. There's a really big disconnect, and I think a lot of people would say this, between their company's valuation and what they're actually doing.
Yeah. I would agree with you. Yeah.
On a whole, just talk about the electric vehicle segment.
Yeah.
For a second, it's less than 5% of sales. I was at a meeting a couple months ago. Originally, I think they were expecting by 2025 it to be like 12%. Now they've even brought that down to 7 or 8%. So while that's a big jump, you're still talking about a pretty insignificant amount of sales, from a national perspective.
Yeah.
You talk about, and then on top of that, they're not the only ones selling electric vehicles. And all these manufacturers, especially, the import ones, are spending an enormous portion of their R&D budgets on all electric vehicles and have been for the last 2 or 3 years. So Tesla has a pretty big head start from a technology standpoint. But these manufacturers are catching up and will continue to catch up.
Yeah.
They've also got the advantage of the dealer network in place. Again, I could be saying this from a jaded perspective here, but just from an infrastructure standpoint, they have facilities already in place. They have service centers already in place. They have sales networks already in place. Mm-hmm. So, yet they are still chasing Tesla. Don't get me wrong. They're definitely afraid of them. Tesla's definitely altered the way they think about the business. And like I said, what they're spending their R&D money on. But there's still a huge disconnect between what's actually going on, today at dealerships in the auto sales market and what Tesla's valuation is.
Yeah.
We probably sell less than 2% electric vehicles. So,
mm-hmm.
I obviously it can continue to grow, but it's not going to happen overnight.
Yeah.
And I do think these other manufacturers are going to catch up from a technology standpoint.
Yeah, I think you can, get kind of off that point, you can almost see it with, the GM and Nikola partnership that happened in the recent past. And then, they had a lot of, allegations from, the activist short seller. That's still kind of yet to be remedied. So I'm assuming that kind of, lines up with your thinking of, some manufacturers trying to catch up and, partnering with, like GM partnering with Nikola in a sense.
Correct.
Yeah.
And it's, you've got companies like Volkswagen and Audi, which is, have the same ownership group, the biggest car company in the world, that is now committed, pretty much their entire R&D budget to electric vehicles. And that, you can go on down the line. Benz the same way, BMW the same way. These are really big companies with a ton of infrastructure and a ton of money that are going all out at chasing Tesla, which again that's the disconnect. These companies that outsell them by 1,000 to 1 are chasing Tesla, which is a credit to Tesla, but at the same point in time, there's a lot of force and a lot of power being directed into EV technology, and it's directed straight at Tesla. So I think they obviously have their fans. They obviously have a ton of momentum, especially in the market side of things, but they're going to face a lot more competition in the next couple of years for a very small segment.
Yeah. And it's not even to mention, their progress they're making towards, stage 5 automation.
Correct.
And we think a lot of other companies, are kind of spending or allocating too much of their research and development budgets towards electric vehicles while also having to deal with the fully automation problem. So.
Correct.
Yeah.
There's a lot of disruptors coming down the line or, already in process in this business, EVs, the automated side of things, the ride sharing side of things, the Tesla aspect, online direct sales, which we kind of touched on. And there's a big disconnect between what these manufacturers are spending their money on and what's actually going on right now in the marketplace. So it's going to be really interesting to see kind of how it all unfolds. So a lot of people making really big bets when it's not necessarily going on right now.
Yeah. And we should also point out that Teslas have much more manufacturing problems upon delivery than just about every other car company in America right now. So I'm sure that will be a big point for you moving forward, being that you have your own garages, your own ports of contact at your store.
Correct. I think it helps to have a direct contact. That's just the customer service side of things. You're working with a person, like my customers can get a hold of me, so they can get a hold of the company owner.
Yeah.
It's more personal touch than working with a company. It definitely helps. But there's another, obviously they did it for a reason. Dealerships make money. We're essentially middlemen.
Mm-hmm.
So there's a very large financial component to cutting out the middleman. So I get it, but it does bring in some challenges, and we definitely have a competitive advantage in a lot of different ways because of the dealer network.
Yeah. I guess to kind of, tie things up here, a lot of our audience is, mainly in the, 21 to 30-year-old demographic. What would be your kind of advice for, people, us going out of college and graduating, kind of like how to decide to buy your first car and stuff like that?
It's a good question. I think people tend to overthink certain aspects of it.
Yeah.
Probably, don't underthink other aspects of it.
Mm-hmm.
There's so much focus on, price, and making sure you get a good deal. And for good reason, but there's like the thought and the idea that when you go to a car dealership, you're getting screwed, right?
Yeah, that's what everyone assumes. Yeah.
So, but at the end of the day, it's, we're really no different than any other retailer.
Yeah.
And yeah, in the 80s, customers didn't have information available to them.
Mm-hmm.
So they were probably getting price gouged on cars. But at this point in time, with all the information from a pricing perspective that's available to customers,
yeah.
I'm not going to say we're a one price or fixed price model,
yeah.
but there's very little difference at this point in time, in what we sell a car to this person versus, the next person. Most, it kind of is what it is.
Yeah.
In a lot of different ways. So I think a lot of people spend a lot of their time thinking about price, trying to get the best price.
Yeah.
And I'm not telling that they shouldn't. But the information that's available is pretty much accurate.
Yeah.
Unless there still are dealers out there that hold that old school shady car guy process in place, but 95% of the new car franchises are pretty much the same as any other retailer.
Yeah.
And I would focus more on the car over the price.
Yeah.
Because the deal is going to be the deal. It's not going to be that much drastically different than anything else. Our margins are pretty thin on the new car side these days. Used cars are priced aggressively. It's more a inventory turn game than a high margin game.
Mm-hmm.
At this point. We all use the same tools to price our cars.
Yeah.
So we know, and if it's, you can go online and look at, 1,000 cars in a small period of time. So it's, cars are priced properly, 99% of the time.
It's probably the most transparent pricing we've ever seen to this point, with like Kelley Blue Book and all those different websites that come out and try to value cars.
Yep. Correct. There's still a little room there, but for the most part, it's pretty much getting close to a fixed price model. And it's become more, like I said, about inventory turn. Now the service side of things is different, but when you're buying your first car, just find a car you really like. I do typically recommend leasing versus buying. I know that there are people out there that are against it for certain reasons. But I just, why put your money into a depreciating asset, especially when you're younger? Save that down payment, put it into an investment, buy a house with it, whatever you want to do with it, and just lease a car. Between the depreciating asset aspect of it, manufacturers heavily incentivize leasing. They subvent the rates, so they'll buy them down. And typically, a lot of people don't like it because they don't think they can get out of a lease at any point in time. For the most part, that's not true. There's a lot of different points in a lease cycle that you'll actually have some equity in your car, and you can get out, you can trade out of it. Now, if a financial crisis hit, that is not going to hold true. But more often than not, at least since I've been in the business, leasing's been the way to go. And again, save your money for something better. Lease a car and just keep doing it.
Great. Sounds like awesome advice. We definitely really appreciate that as coming from someone who has as much experience as you. We really appreciate you coming on the podcast today. I certainly learned a lot, and it's been a great time meeting you and learning about your history in the industry.
I appreciate it, guys. Thanks for the questions. I hope it wasn't